Lara, your initial take on these numbers?
Yeah, I mean, I think our economy is still heavily dependent on the consumer, which thankfully does not seem to be internalizing a lot of the uneasiness that has so afflicted Wall Street. So Main Street's still looking positive. I think, we were just talking about Tuesday, what could happen next week. We get really key data. The ISM manufacturing numbers out on Tuesday, payrolls at the end of the week. I think the number one risk we're facing right now is actually not another tweet or another sort of volatile day in the markets. The big risk is that businesses get so nervous that they either freeze hiring or actually lay off. That, I think, would finally connect the dots to the consumer that things are a little less certain with the economy. It's not my forecast, but I think that's what we're all nervous about.
Daniel, I do think Lara's put her finger on exactly the question, which is at what point does the slump in manufacturing trickle through to the consumer through employment? Companies start saying, we can't hire as many people, or even we're going to let some people go. How do you assess that risk?
Well, I think you can see some sign that that's already happening if you look at the PMI, Purchasing Manager indices for the services sector. I mean, what we've seen over the last several months has been the slowdown in manufacturing, clearly very linked to trade, but services had stayed quite resilient. Of course, services being the bigger part of the U.S. economy by far. But over the last couple of months, you've seen a slowdown in services, honestly, like you saw in Europe at the beginning and at the end of last year, which was then followed by technical recessions in parts of the region. So there are some signs that you're seeing a bleed from manufacturing into services. At some point, that certainly is a risk that it hits the consumer. So there are warning signs out there. I think the comforting point should be, though, with the data that was just released, is inflation is still quite benign. So as long as we don't see a pickup in inflation, meaning the Fed isn't going to turn around and start raising rates, I think there's still scope for low interest rates to support growth.